Monaco 64, home of alternative economics and contrarian views. This interview is being recorded on Wednesday, June 10th, 2020. Today I have the pleasure of speaking with Dr. Thorsten Polleit. He's the professor of economics at the University of Bayreuth in Germany. He's also the president of the Mises Institute in Germany. And it's weird because the last time I was in contact with Thorsten was when I was in the city. He used to work, I think, for Barclays in Frankfurt. And I used to read all his stuff on the Mises.org website because he used to contribute to that website, and I think he still does. And I contacted him via my Bloomberg message, and we used to chat a lot, especially during the last sovereign debt crisis in Europe. And it's weird because just in the pre-interview, we just said that that crisis isn't over. So Thorsten, thank you very much for joining me, and I'm sure my viewers will enjoy hearing from you.
Thank you very much for the invitation, Mario. It's great to be in contact again, and the pleasure's entirely on my side.
You're welcome. So, yeah, I have a few questions for Thorsten, especially with what's going on, the crazy monetary and fiscal policy we're seeing, not only in the US, but in Europe, here in the UK, and everywhere around the world. So we're going to start with an Austrian school concept of the Austrian business cycle theory. So the first question is, could you tell us how the current monetary and fiscal system's efforts to avoid the business cycle, how it will impact on society and the economy in general?
Well, I think the first insight is that we live in a fiat currency world. That means, be it the dollar, the euros, the Chinese renminbi, the Japanese yen, the British pounds, the Swiss franc, they are all fiat currencies. And the term fiat comes from the Latin word fiat and means so be it. So you could say fiat currency is something decreed as money. And when you look into monetary history, this is not the norm. The norm is money in the form of precious metals like gold and silver. But in the 1970s of the last century, the US dollar was taken off the gold. And since then, we have an unbacked paper currency, or a fiat currency world, as I like to term it. And the fiat currency has certain characteristics. Number one, it is a monopolized money issued by state-sponsored central banks. Central banks hold the money production monopoly, and they hand out a license, so to speak, to commercial banks, which also can participate in money creation, fiat money creation. The second characteristics of fiat money is that it is produced through credit expansion. Whenever a bank issues a new credit to households or firms, it creates new money. So fiat currency is typically created through bank credit expansion. And it is important in this context to know that this credit expansion is not backed by real savings. It's money creation out of thin air, so to speak. And the third characteristics is that fiat currencies consist of colorful printed paper tickets and bits and bytes on computer hard drives. So it's kind of money that's completely dematerialized and can be increased at very low costs at any point in time in basically any amount politically desirable. And the fiat currency as such is not a harmless thing. It causes economic and, of course, ethical problems. For instance, the issuance of new fiat currency through bank credit creation suppresses market interest rates. The artificially increased credit supply that is getting injected into the market suppresses market interest rates in comparison to the interest rate that would prevail if such an increase in credit would not occur. And as the market interest rate is artificially lowered, savings are discouraged, consumption is increased, and also additional investment takes place. And the first reaction of the economy to an issuance of fiat currency is a boom. The economy starts living beyond its means, and the boom is quite enjoyable. Incomes increase, stock prices go up, housing prices increase, there are more jobs, but sooner or later, the boom turns into a bust. And in the bust, basically, all this malinvestment, this overconsumption that has been built up in the boom period gets corrected. But of course, people don't like a bust, they like the boom. And so the central banks, whenever a boom is in danger of collapsing into a bust, enter the market and issue new fiat currency to keep the boom going. And so you have these ongoing boom and bust cycles. What we saw in 2008 and 2009 was an example par excellence of this so-called Austrian business cycle theory, namely that the issuance of ever greater amounts of fiat currencies and credit sooner or later causes a big crash, a bust, so to speak. And we are still in this period of boom and bust, in this era of boom and bust. For instance, the collapse as a result of the politically dictated lockdown crisis has made governments to issue even more debt, and central banks are churning out ever greater amounts of money to keep the boom going, to prevent the system from correcting itself. And so we have a lot of bad consequences that come with fiat money. Maybe as a final note in this context, fiat money effectively increases people's time preference. Time preference means that people value a good that is available in the presence more highly than the same good and the same conditions at a future point in time. And the issuance of fiat currencies increases people's time preference even more. So people become very short-term oriented in various ways in their daily lives, and it affects the education process and many other things in our lives. And so the fiat currency system is really a huge problem, a colossal problem for the development, for the prosperous development of societies all around the globe.
Yeah, and it's frustrating because we know this, and it's been happening since 1971, since Nixon closed the gold window. But we don't hear anyone, politicians or Greta Thunberg or anyone else saying that maybe it's all the unlimited credit that's made the world such a conspicuous consumption machine. And yeah, I agree with you. And that's one of the reasons why I've been doing my videos, to try to wake people up, that you hardly hear any politician or any central banker say, oh, maybe we need to rein in all the debt and the consumption. But maybe this lockdown crisis could have, I guess, a silver lining. Maybe people will not consume as much, but I'm not convinced, because governments don't seem to want to do that. Anyway, can we look at what the consequences of the current monetary policy actions by the Fed, ECB, and all the other central banks will be, in your opinion?
Well, we just talked about the so-called Austrian business cycle theory in its pure form. And when we look into reality, we find, of course, that this theory applies, but it applies under so-called special conditions. For instance, in real life, people make new innovations, they come up with new technologies, and that increases, for instance, an economy's productivity. And so a fiat money-induced boom may last longer than most people would expect, just looking at the prescription of pure theory. What is more, if you have in a fiat money boom increased productivity, the debt sustainability of the economy improves. And again, the fiat boom may last longer than most people would expect. And what's really important in this context is that central banks have actually intervened in capital markets on a grand scale. They have actually lowered interest rates to basically zero, or even suppressed interest rates, like in the euro area, to below the zero line. And in addition, they have put a safety net under the economies and the financial markets, encouraging investors to engage in risky trades, to lend money to low credit quality borrowers, and to keep, the debt pyramid, the increasing debt, the system that increases the debt load, it keeps the system going, so to speak. And the corrective forces that can push a boom into a bust have been greatly diminished. So that is actually bad news, because the economy has no longer the ability to rid itself from malinvestment, from overconsumption. The artificial boom is kept going for quite a while, as you see, before the coronavirus hit. And the massive increase in debt and money supply we saw in the last weeks is most likely to keep this boom going. And this is a good example, I think, for showing that pure theory must be put into perspective when you apply it to the real world. And the final note in this context, Mario, economics is a science very different from natural science. In natural sciences, you can come up with constant relations, like if A increases by X%, B changes by Y%. And in the field of human action, there are no such constant behavioral constant, I should say. It's a completely different game, and that makes forecasting so difficult, and most forecasts go wrong. But the underlying structure we can detect, we can identify what fiat money does to our economies. And as I said, my take is central bank will succeed in propping up the system by basically putting to rest corrective market forces.
Yeah, and I think you recently wrote that would lead to more and more of what you call in German Befehlswirtschaft, which means the command economy. It will hamper the free market, and will become much more of a government-run system.
Yeah, that's a very important insight, I guess. All these relief packages, all these rescue measures, they come at a price. And the price is we lose our freedom, our civil liberties. The free market system gets increasingly eroded, or I should say what little is left of the free market system is getting increasingly eroded. And sooner or later, the Western free market system is getting replaced by what you rightly termed a planned economy style system, something the Germans call Lenkungswirtschaft. That was basically the economic system that the National Socialists put into place in the 1930s.
Yeah, and that will, I think, make things even worse for economic growth going forward if the free market isn't able to function as freely.
Absolutely. I think a very important insight really is that people's prosperity depends on the free market system, that we have the ability to create an international division of labor, that people can specialize in doing and producing things, and that we trade. And this increases the productivity of our labor and our prosperity. It provides the means for people around the globe for creating incomes. And if we put policies into place that push back capitalism, the free market system, that puts into danger the existence of millions, maybe billions of people around the globe.
Yeah, and I mean, I guess the only hope is that the central banks fail eventually, and that we have to revert back to that kind of system. But now I'd like to touch upon what's happening in Germany, and especially in relationship to the ECB. The ECB has been, they just announced, I think, last week, 600 billion euros more in QE. I think they announced 750 billion a few months ago. So they're up to almost 1.4 trillion. But recently we've had a constitutional court in Germany, in Karlsruhe, that said that the ECB needs to give a very good reason within a few months for the QE in order for the Bundesbank to be able to continue to do the QE. So do you think this is going to be a problem for the ECB? And do you think it could eventually create another sovereign debt crisis in Europe? Because we all know if the ECB wasn't intervening like they are, countries like Italy, Spain, Greece, their bond yields would be a lot higher.
Yeah, I think you're absolutely right in pointing the finger towards these issues. Let me start by saying that the debt problem is a global problem. The Institute of International Finance, for instance, estimated that at the end of 2019, global total debt amounted to $255 trillion. That was around 322% of world GDP. And the coronavirus and all these debt measures taken by governments will add another 20 percentage points to that ratio. So it would go up to 342%. So that we have a huge problem at hand. And obviously, people haven't learned from 2008 and 2009. They fight a crisis, an economic crisis with ever great amounts of money and debt. And of course, this is not sustainable. Now, when we look at what's happening in the euro area, of course, the euro area has the debt problem as well. We have a huge, highly leveraged banking industry in the euro area, which is basically around about 300% of GDP, and governments which run into ever great amounts of debt. And so the European Central Bank has started basically in recent years to monetize debt. And the latest program was the so-called public security purchase program. And we had a court decision about this lately, as you rightly said, on 5th of May this year. Germany's highest court ruled that the German government and the German parliament was basically in violation with the country's basic law, because they have not taken measures to assess or to substantiate the measures taken by the ECB, and to find out whether they satisfy with the principle of proportionality. And the principle of proportionality basically means that any action taken by EU authorities must be within specified bounds. And the German court finds that the ECB has overstepped its mandate. And as you said, it requires now the German parliament and the German government to take steps to make the ECB to come forward with some assessment as to whether its action conform to the principle of proportionality. Now, what will come out of it? Maybe there will be a kind of horse trade, and politicians saying that the measures taken by the ECB are in the best interest of the euro area and the German economy, something like this. And so they let the ECB off the hook. But Mario, there's another aspect which is, I think, even more important. Another conflict is coming. The German court basically said the PSPP, so the Public Security Purchase Program, was not in violation of the prohibition of the ECB monetizing government debts. That is enshrined in this prohibition in Article 123 of the EU treaty. And why did the court rule in this way? Well, the court said the PSPP was basically in accordance with certain principles. For instance, purchases were made in accordance with the ECB's capital key. That means the capital key represents the share of national central banks in the ECB capital. And purchases did not exceed the limit of 33% of each security issued by an issuer. Now, they have announced, and you referred to that program already, this so-called pandemic emergency purchasing program of around about 1.4 billion euro. That's
trillion.
Excuse me,
yeah.
Trillion. Yeah, that's basically around about 10% of the outstanding stock of money in the form of M3 in the euro area, so it's pretty big. And it's very unlikely that the PEPP is in compliance with these requirements, and then the court will come up with saying this is a violation of the prohibition of the ECB financing member states. And so the whole story boils down to a quite painful insight. Either you're going to break fundamental principles of the German constitution, or you have to exit the euro, or you have to change the policy conducted by the European Central Bank, but then some governments in the euro area would definitely default. So it's a very nasty situation that comes up. And let me just say at this juncture that the constitutions were made, the German constitution as well as all other constitutions, were made to protect civil liberties against the despotic inroads on the part of governments, to preserve civil liberties. So with this insight, you basically end up with the perspective that the euro can only be upheld if we basically say goodbye to important principles that so far have defended and upheld our civil liberties.
Yeah, and it's ironic because the European Union, the whole project is supposed to create stability, but it seems to be creating more and more instability. The other thing I remember back in 2010-11, when the European debt crisis was starting, the sovereign debt crisis, there were a lot of stories and rumors that the Germans were printing Deutschmarks again because it was touch and go. At the time, people were saying, well, it's going to end, but then Mario Draghi saved the system with his he's going to do all it takes, right? But I wonder now if this is going to come up again. And with that in mind, I know that you are in the precious metals business as well through Degussa. What do you think would be the best thing for investors, not only in Germany, but throughout the European Union and throughout the world? Would it be to have bonds or precious metals? I guess that's not a tough question for you. But,
no, it is Mario, it is a tough question. Maybe if you're a good trader and you get the market timing right, you can make a fortune in trading bonds. If you're a long-term investor, you may not be getting attracted by the current yield environment. But let me put it this way. There are various scenarios we can imagine unfolding in the coming quarters, in the coming years. I tend to be cautious and conservative when it comes to making a call as far as the future is concerned. But I'm pretty confident that investors have to cope with one huge challenge, and that is the erosion of the purchasing power of money. I think this is a done thing, that the money printing in the US and the euro area will debase the purchasing power of fiat currencies. And I would recommend holding gold as a substitute, as a replacement for, let's say, time and savings deposits. For instance, in Germany, people hold around about 3.6 trillion euro in forms of time and savings deposits, which get debased over time. And so gold is certainly the best alternative to these funds. And because gold is basically a currency. From my point of view, it's not a commodity or an asset. It is a type of money that competes with the dollar, with the euro, with other unbacked fiat currencies, so to speak. And gold cannot be debased by central banks running the printing press. It is with humanity thousands of years now, and it will survive the dollar and will survive the euro. And looking at current prices, I think gold is not too expensive. Those investors who have a long-term horizon of, let's say, 3 or 5 years, I think it's attractive to build up the gold portfolio as a part of the liquid means in one's portfolio. And the second recommendation goes for stocks. I think, and this is a quite optimistic viewpoint, I admit, that we have to preserve the market system in order to make progress on this world. And I think people will succeed in doing so. There will be bad periods and periods where difficult situations occur, but over time, looking ahead, I think holding stocks provides the investor with an opportunity to participate in potential productivity gains around the globe. So in the most simple form, if you don't have a great knowledge about specific companies and you don't think you can outsmart the market as a whole, I think it is advisable to buy, let's say, a world stock market index or a world stock market ETF, put it in your portfolio, and together with gold, I think this is a possibility to weather the storm that is basically upon us. But the timing of this development, when certain things occur, we simply do not have. And so I personally feel quite comfortable in recommending holding gold as a means, as a liquid means, and putting capital into the world's stock markets.
So to finish off, I'd like to ask Thorsten about the Austrian school, because that's how I got to in contact with Thorsten, and I've been a follower since early 2000s of the Austrian School of Economics. And could you tell our viewers the main tenets of the Austrian School and why it's so important for freedom and liberty in the world, in my opinion, as well?
The Austrian School of Economics is very different from Keynesianism, from monetarism, from neo-Keynesianism or post-Keynesianism. And what makes the Austrian school so special is that it puts a focus on human action. The individual is the point of interest in that school. You wouldn't argue with aggregates, but you always boil down the theoretical thinking to individual action. It is a theoretical framework which analyzes in depth the system of free markets. It comes up with insights showing us that individual action is inseparable from a functioning system of free markets. That free markets basically bring us prosperity, create peaceful and prosperous relations between people around the globe, and that they also show us that, for instance, we cannot print up prosperity by running central banks' printing presses. We don't create prosperity by manipulating the interest rates to zero or even below zero. And these kind of insights are provided by the Austrian School of Economics, in particular because this school is very different, as I said, from other theoretical doctrines, because, and this is the final point I would like to make in this context, it is based on a different method of science. The Austrian economist would argue that economics is not an empirical science, but it is a logical science. Its theories and theorems can be analyzed, can be detected by logical deduction, starting from the irrefutably true proposition or sentence that humans act. Unfortunately, the Austrian school is not as popular as, for instance, Keynesianism these days, but I'm confident that with problems growing around the globe, economic and social problems becoming more pressing, people will look for solutions for a better understanding, to solve all these challenges that lay ahead. And so the Austrian school, I think, in the coming years will gain in prominence, and I'm quite confident that this will occur. And I personally work I do my very best in spreading the news that there is a better theory out there that helps people to create a better world.
I totally agree, and that's why the viewers need to share this video. I've been trying to put that message out for the last 5 years through my videos. And as you said in the pre-interview, people out there in the general public, they need to learn about that. People are they're blind to the fact that what they really want right now is just the government to do everything for them, but they need to learn that there's no such thing as a free lunch. And I think that's the most important message of the Austrian school. So Thorsten, thank you very much for your time and for coming on my channel to chat with me. And I'm sure my viewers will really enjoy this interview.
Again, thanks very much, Mario, for the invitation, and all the best, and keep up your great work, and I hope to speak to you soon.
Thank you very much, and keep up your great work as well. The viewers can find Thorsten's writings on the Mises.org website. I'm going to put a link to it below in the description. Thank you, Thorsten.
Thank you. All the best.